Welcome back, traders. Have you ever heard of the fair value gap? We're talking of the empty space on the charts where the price moved too fast. When you're looking at our charts around this area here, you can see we had the impulsive move around this area and the price left the imbalance here. How can we identify the fair value gap? We want to see the aggressive move and the first candlestick with the third, the wicks does not overlap the body of the middle candle. In this fair value gap that I have already marked around this area, if you trade in the fair value gap, then we want to see the price come into this fair value gap and respect it. Retesting the fair value gap and bouncing back, continue with its movement. But what if the price does not respect the fair value gap and crashes down through the entire gap and closes below it? So that's the inverse fair value gap. So if you want to trade the inverse fair value gap, I will just stretch our fair value gap here. Now we see that the price did not respect the fair value gap, but it just passed through the gap and closed below it. So what we can do is just to wait for the price to come and retest the inverse fair value gap. And that's where you can get your entries. Then we see price crashing all the way down. You can target 1:2 risk rewards or the recent low. You can just benefit from that. So let's look for the bullish example. So like this example here, we can see the price came and we had the fair value gap around this area here. What we were expecting is to see the price respect this fair value gap from here, coming here in the middle and respect the fair value gap, continue with the downward movement. But what happens, we see that the price broke above this fair value gap, came and retest our fair value gap around this area. So we see that the price formed this fair value gap and we were expecting the price to respect this fair value gap. However, we see the price breaking through, disrespecting the entire zone, came back and retested, continue with the opposite direction. So since we're looking up for the entries, then we just want to see the price come into our inverse fair value gap and we can set our stop loss just below the zone and target 1:2 risk rewards. So if you want to know which time frame you can use, right here you can see I'm using 1 hour time frame to avoid a lot of noise. So you can just keep on practicing the same strategy until you see yourself being profitable. So the best time frame it's on 4 hour, 1 hour. You can take your entries on 15 minutes. If this video helped, please hit the like button, share the video, make sure that you comment IFVG, go back test, subscribe to this channel and make sure that you share with your loved ones. I wish you all the best in your trading journey. Until we meet again on the next video.